Wow, a crypto winter has descended and it has been absolutely brutal. So, in this explainer, we're going to break down the dramatic crypto market crash of February 2026. What happened, why it happened, and what might come next. All right, let's get right into it. $500 billion. That's how much market value was just wiped out in 1 week. To really put that in perspective, that's $500 billion. It's an almost unimaginable amount of money, and it just shows you the sheer severity of this crash. And this chart, wow, it just drives home the magnitude of the collapse. I mean, look at Bitcoin. It's the leader of the crypto market, right? Its value got nearly cut in half. We're not talking about a small dip here. This was a dramatic, breathtaking plunge that sent shockwaves through the entire system. And just to give you an idea of how significant this drop really is, Bitcoin is now sitting at a 15-month low. Think about that. That means every single gain made since the 2024 US election completely wiped out. Poof. A year and a quarter of progress just gone in a matter of weeks. Yeah, it's no surprise that people are already calling this the 2026 crypto winter. So let's zoom in a little bit and take a closer look at just how widespread the damage has been across the entire market. And believe me, it wasn't just Bitcoin feeling the pain, not by a long shot. As you can see right here on February 5th alone, Ethereum also took a massive hit. This just goes to show you, this crash wasn't isolated to one coin. No, this was a market-wide event. The contagion was spreading, and it was spreading fast. Which, of course, brings us to the big question, right? Why? Why did this all happen so suddenly, so aggressively? Well, we're going to unpack the 4 key drivers that analysts believe are really behind this whole thing. And here's the thing. These weren't separate, isolated issues. They were all converging at once, creating a kind of perfect storm. You've got pressure from the broader economy. You have geopolitical instability, a really technical market event called a liquidation cascade, and a major shift in institutional investment. Let's actually tackle that technical one first, because it is absolutely crucial to understanding the sheer speed of this crash. So, what on earth is a liquidation cascade? Okay, the best way to think about it is like a domino effect. It all starts when traders borrow money to make bigger bets. That's called leverage. Now, when the price drops, even just a little, their positions are automatically sold to cover those loans. The problem is, that selling pushes the price down even more, which then triggers the next wave of automatic selling. See where this is going? Okay, so here's that vicious cycle in action. It all starts with just an initial price drop. That forces some of those leveraged positions to be sold. But that forced selling creates more selling pressure, which, you guessed it, makes the prices fall even further, triggering even more sales. It's this nasty feedback loop that can just quickly spiral out of control and pour gasoline on a fire. And the scale of this cascade? It was just immense. We're talking $5.4 billion in these leveraged bets, wiped out in just 72 hours. That is a massive, massive amount of forced selling pressure hitting the market all at once. But here's the kicker. This wasn't just an internal crypto problem. Those dominoes, they were also being pushed by some pretty big external pressures. On the economic side, you had unexpectedly high inflation data and a lot of worries about a more aggressive Federal Reserve. That made investors really nervous about risky assets, like crypto. And at the exact same time, geopolitical conflicts were creating this general risk-off mood in the markets, pushing investors toward what they see as safer havens. So picture this. While all those smaller leveraged traders are being forced to sell, what are the big players doing? Well, they were heading for the exits too. The spot Bitcoin ETFs, which remember were supposed to be this stable gateway for big institutional money, saw nearly $1.5 billion get pulled out. And the implication here is huge. It suggests a really serious loss of conviction from the very institutions that everyone thought were key to crypto's long-term legitimacy. So, with all that in mind, the big question is, where does the market go from here? This is where the story gets really, really interesting. Let's take a look at what the experts are saying about Bitcoin's pretty uncertain future. Okay, so the immediate outlook is tense, to say the least. Right now, analysts are watching a key price range between $60,000 and $65,000. They see it as a critical support level. And the big fear is that if Bitcoin can't hold that line, if it breaks through that floor, The next stop could be a much, much deeper slide, maybe all the way down toward $50,000. And this isn't just happening in a crypto vacuum. This crash is having very real ripple effects in the traditional stock market. Just look at companies like Strategy, the ones famous for holding huge amounts of Bitcoin on their balance sheets. Well, they are getting hammered. With Bitcoin's price now way below their average purchase price, their stock has just tumbled. It really goes to show you how intertwined these two worlds have become. But it's important to say, not everyone is seeing this as a complete doomsday scenario. You've got major institutions like Deutsche Bank, for instance, offering a more measured perspective. Their take is that this crash is really about a temporary loss of investor confidence, a crisis of sentiment, and not some fundamental structural failure of the underlying technology. And that right there is a really crucial distinction to make. And that really leaves us with the ultimate question, doesn't it? After seeing this perfect storm of leveraged bets, global fears, and institutional flight, is this just another harsh but temporary crypto winter that will, eventually thaw out? Or are we witnessing something bigger, a more fundamental long-term climate change for the entire digital asset space? I mean, that's the billion or maybe even trillion-dollar question.